Deutsche Bank is officially near collapse. They have laid off some employees as their stock continues to drop, revenues along with it. This comes at a time in which markets are rising. Post-financial crisis, we were told that there would no longer be any too big to fail banks. But in this case, we are facing the juggernaut of the banks. Deutsche Bank carries enough derivatives to collapse the entire financial system. You came here for the truth, so let me unveil that for you. Today we are going to have our focus on Deutsche Bank. Let's begin. You can see here the stock over the past few months has been declining, and it has been part of a larger trend that since the financial crisis has been also declining. It's been moving on this downward angle even though the markets in general have been moving upward since March of 2009. Clearly there has been a trend that Deutsche Bank has not followed. So you can see that they're in the process right now of shedding a few jobs. And that's what happens here when times get tough. The businesses obviously have to lay people off. It is a small percentage-wise compared to their overall workforce, but it does show us that they have some weakness that is in place here. Deutsche Bank has started to cut at least 250 jobs globally at its corporate and investment bank as Germany's largest lender seeks to keep a lid on expenses amid the sustained slide in the securities unit. So they're saying that it could be up to 500 people. So we'll see what happens with that. So looking at this here, Deutsche Bank's revenue has fallen in 8 out of the 10 previous quarters. Now you can see this for yourself. As soon as they get their new CEO, things don't look pretty all the way up until present day. They have a very big problem with their revenue at this time, and they're trying to do what they can to shore up some of these issues. Now, look at this. You have the CDS. You may find this familiar from a previous time, only a few years ago during the financial crisis. These really became popular, a great way to bet, to have an insurance on a collapse. Well, you can see what has happened right here. They are under the assumption right now bad things are about to happen. Previously in history, one of the countries that were severely affected by the CDS was Greece. How Goldman Sachs helped Greece to mask its true debt. Goldman Sachs helped the Greek government to mask the true extent of the deficit that they had with the help of derivatives, deal that legally circumvented the EU Maastricht deficit rules. At some point, the so-called cross-currency swaps will mature and swell the country's already bloated deficit. And of course, this was a huge problem at the time, and it really almost collapsed the nation. They had to come in. They basically said, okay, we're going to restructure everything. We're going to take over. You're going to sell off all your assets, and that's just the way it is. They didn't have a choice. They went through not only one, not two, but 3 bailouts, and that's just the way it is. They don't have a choice in the matter. The government doesn't have a choice. The people don't have a choice, and unfortunately, Greece suffered. Now, looking at Deutsche Bank, you can see that they have a huge derivatives portfolio. In fact, they have the world's largest. This is something that needs to be understood because the financial media is not going to cover it, and most of the alternative media simply doesn't touch it. I don't know why, but it is very, very important. It was one of the primary focuses in my first book, also of course mentioned in my second book, but here we go. Its portfolio of financial contracts based on the value of other assets in the world peaked out at over $75 trillion, about 20 times the German GDP, shrunk to around 46 trillion by the end of last year, and this is actually a little outdated. I believe that it has gotten worse. That's around 12% of the notional value of derivatives outstanding worldwide. You can see that the numbers are quite small. In fact, when you look at a 384 trillion, I've seen numbers that are at minimum 5 times that. So, you know, whatever statistic you want to use, it doesn't matter. $384 trillion, impossible to ever be paid back. But think about this. 46 trillion. Let's just take that number, take an average, take something that we know for sure. There's no way that this bank could ever be bailed out. It's not possible. It is just mathematically not going to happen ever. So we have a situation, it's called too big to fail. But we were told in the financial crisis that this would be the last time. There would never be a time again when we would have this too big to fail mentality. So in recent years, they've started to implement something else, and that's the bail-ins. No longer do we want to bail out corporations, we want to bail them in. What does that mean? Look, the people who invested, they are on the hook. Bail-ins are great. Bail-ins are going to be sold to people as the new messiah for the markets. Unfortunately, it's not going to be so easy. It's not going to be the people who are basically buying into the stocks or the bonds. It's not going to work like that. It's going to have to be just like they had in Cyprus. They're going to take from every category, and that includes bank accounts, investment accounts. Look at what happened. People don't want to believe it. Fine. Leave this aside. Leave Cyprus aside for just a moment. Think about what happened with MF Global. MF Global had segregated accounts, and they stole from those accounts. That's one example of many. Don't forget that. Anytime people have this silly mentality that, oh, it's just Cyprus, stop listening to this people and this and that, you're not really allowing people to understand the truth. MF Global was one small example. All right? Now, they're talking about, trying to make it seem, oh, it's okay, nothing to worry about here, but of course it is. There is a contagion that can take place in the system. We found that out during the financial crisis, subprime, and all this other business. There is a domino effect that will hurt a lot of people. Look at this. It's blurry, it's hard to see. I just want to cover it for a moment. In the center of this web, you see Deutsche Bank. Interconnected with that, you see some of the American banks, whether it's Bank of America, Goldman Sachs, JP Morgan, and others. Or look, even Bank of China, I believe that says Santander. We're going in for BNP, Unicredit, UBS, Barclays, HSBC, and so much more. They are all interconnected, and people don't want to believe it, of course, because maybe they have an investment or two with these companies. And guess what? If we extend this out, I'm sure we would see all the big corporations out there all finding themselves intertwined into this web. And you need to understand how this all works. Central banks are at the core of all of this. The central banks meet with the commercial banks, and they collude together. You have to realize that. They collude together to make this work. They sit around the table and decide what's it going to be. What about LIBOR? You remember LIBOR? The total fraud? Well, now we're finding out in more recent years that, oh, wait a minute, it was all a fraud. It was all a scam. And the big boys sat around and decided what it would be. We didn't decide that. It wasn't a fair rate. It wasn't free market. No, they sat around the table and said, this is what it's going to be today. This is what it's going to be tomorrow. You're going to act this way. You're going to act this way. It's completely contrived. We have the Federal Reserve's own admissions that they short volatility. We have so many examples of banks going out there and purposely creating a crisis, creating a problem they know is unfixable. But as long as we get the regulators to shut their mouths and close their eyes, everything is going to work just fine until you have a moment in which the trigger is set And that's what happened during the financial crisis. This will happen again. Unfortunately, all of the safety switches, they're off. Nothing's happening right now. Nobody is looking at the safety. Nobody's behind the wheel. Nobody's in the cockpit at all. We have a very big problem on our hands, and there's a few naysayers out there that are very, very stupid, in my opinion. It just had to be said. Debt issued by the Treasury. Switching gears here for a moment. Now, when you look at derivatives, that's something else. That's huge. That's massive, right? But look at the nations. How much debt that these nations carry, okay? So we're looking at the government's, U.S. government's own numbers, okay? They're projected by 2028, so basically 10 years from now, that they will be in debt. $30 trillion. $30 trillion of debt. How are they ever going to pay back 30 trillion? I mean, you're going to see the debt to GDP ratio. I mean, what is it going to be? 120%? Will it be higher? Who knows? It's going to be something that they can never pay back, right? But underlying all of this, you have the derivatives. Derivatives are the ones that sit there silently, and they wait and they wait. But that's when the triggers occur and everything comes tumbling down. We saw that financial crisis. It was very, very easy to see. Look at what happened with the VIX. Something so silly like the VIX. Nobody ever talked about the VIX before. I was covering it, suggesting to you that it was rock bottom. The VIX was rock bottom for a long period of time, right? Nobody mentioned it because it was rock bottom. It's not news. It's not important until it became very important. That's what will happen. Whether it's going to happen to Deutsche Bank, whether it's going to happen to derivatives out there, one of these different derivatives products is going to have to fail at some point. It could be mortgage-backed securities, could be credit default swaps, it could be any one of these collateralized debt obligations. I don't know which one, but when it happens, it's going to collapse the financial system. Maybe some people out there, they don't want to hear it. Why? Because they're scared. They got a lot of money invested in the system. And guess what? I feel their pain. I understand where you're coming from. I talk to people all the time that have so much money riding on the fact that everything stays status quo. And guess what? It's going to stay status quo until it doesn't. If you found this video informative, please give me a thumbs up. When you give me a thumbs up, it supports the channel. It pushes these videos higher up into the YouTube search rankings. If you don't like it, give me a thumbs down. And guess what? All of those people out there giving negative comments who view these videos every single day just to leave their negative comments, just to watch it as some sort of weird psychological behavioral mess that they have. Thank you, because you are supporting the channel. Your comments, your negative comments, your thumbs down actually support this channel, so I do appreciate that very much. Thank you. That's all for this video. If you want to check out my books, there are links in the description below. Take care.